Hello, everyone. Mike Arnold's here, co-founder of Pat Trading Partners, along with the one and only Bob Iacchino, who is here today. So, if you want to hear what Bob has to say on Tuesdays and Thursdays, please do consider subscribing, ringing that bell, and hitting the like button. Longer-term viewers and subscribers, please like and comment on the videos. All right, just a quick recap before we bring Bob on. Durable goods miss. We went over that this morning. Market manufacturing PMI flash came in better than expected, 58.5 versus 56.3. And we had Fed speakers tomorrow. We have consumer sentiment in the morning at 9 a.m. Central Time, and we have pending sales for homes, and we have Williams Barkin and Waller speaking again, so could be some more volatility. Also, keep in mind next week is quarter end, so we could see continued pushes in for higher prices through then. Let's see, FOMC 70.5% with a 50 basis point. We're clearly slightly in positive gamma territory with this push up at the end of today. And you can see lots and lots of green. So with that, speaking of green, I'm going to bring on Bob Iacchino, if I can say his name, would help. And if I could unlock my stuff, there we go. Now we got to do a shrink. We got to bring the chart back on and do and I got to disappear Little Mike.
That's
Mike is on
weird.
top of, I don't want that, was going to come out horribly wrong. So I'm just going to pause it there. Bob, welcome. What do you have to say?
Nothing. I like the price action. I
You
mean, if
like
you want to be
the
long,
price action,
yeah,
sideways correction, holding 4 hour rotation zone and
yeah,
continued rotation back up?
yeah. From an equity perspective, I like the price action. And, if you are a follower of price action, you're not married to what your fundamental beliefs are. I still don't like the fundamental picture for stocks, honestly, at all, long to medium term. But I certainly like the price action right now. So, I mean, if we got sort of another test down there and then pop back up above that 200, I would take a long position. I certainly would.
Yeah, there's definitely some long price action to get today. Well, we got wavy here, green across the board. Davey, 8 days, 8 green days in a row for Tesla. Josh, hey, Josh. Give me some other thoughts. What do you think about the Fed speakers yesterday and today? What do you think about what would you have the P? What I just blanked out now. The major releases today? What were the major releases today? What do you
Well,
think
you had
about the
all those coming
durable
in mind.
goods and about the PMI flash?
Well, look at the jobless claims, first of all. That jobless claims number was the lowest weekly jobless claims since September of 1969. I mean, that's a low number. So I suspect that there's some sort of seasonal adjustment or a sort of, what do you call it? Revision that's going to happen to that number. But I also think it's in part because so many people have run out of their benefits, right? Because the amount of people, I think there's a little bit of a skew in that number based off of that. I heard Mike McKee, who's Bloomberg's economist, say today that is a dramatic number. And I'm thinking to myself, I personally know of 20 people who ran their unemployment down to zero in terms of availability, during the pandemic. So I don't think it's as shocking to see a number that would come in that low. I don't know what the reset rules are for that number. I would go to then take a look at the durable goods numbers, which I don't think it shows up here. You might have to click. You're
What
showing the low there as well?
what do you want me to click on?
I don't think it's in this batch of numbers because it's a minor component to the durable goods, but the capital spending missed to the downside as well. And that's a bad sign for, it's basically an indicator of corporate spending, right? And it came in, I believe it was down 0.3. It was expected at up 0.6. Capital shipments were up. So that means that you kind of have to look at the next batch of numbers to see if the shipments were up from prior spends, and now it's going to be on a little bit of a downtrend. You don't want to see capital spending go lower. It's basically, oh, there it is. It's the non-defense goods orders ex air. That's basically corporate capital spending is what that is, right? Because it's not airlines and it's not defense. So it's what all the other companies would buy. And that came in at down 0.3. It's expected at up 0.5. And last month's was an up 1.3. So slowdown in capital goods spending, not a good thing either. So the durable goods numbers were not good. But then all those PMIs were good, really across the board. The only negative PMI number I remember seeing was Germany, I think. I'm looking at it right now. No, it was UK manufacturing PMI, which, that globally powerful UK manufacturing sector. I think you're picking up my sarcasm. We don't have to worry so much about that. So that's where I would look at on the data. So overall, the numbers were pretty decent. I don't love that durable goods balance there. And again, from the Fed speakers, it almost feels like the Fed speakers are trying to convince the market they'll be aggressive. And if that's the case, if you remember a couple of live streams back there, we talked about how the only 2 periods of rate hike cycles that showed negative equity returns was when the economy was either stagnant or just not growing, or slowing or not growing, and it didn't work. In other words, the rate hikes didn't curb inflation. Inflation was either static or higher at the end of the rate hike cycle. That's when you got negative equity returns. And I still suspect that's what we're going into. But this price action is very positive. I like the looks of the price action here. And, is Wavy in here? I don't know if Wavy's in here.
Wavy's in here.
Okay, so Wavy, when you were talking about it's hard not to be long here, I would rather take a larger position with tighter price action on a confirmed price action move up than try and pick a bottom. And literally the financial gain can be the same if that's what you're doing, right? If you're taking like a larger position with tight stops and somewhat of a shorter hold time than trying to pick bottoms, because picking bottoms is so dangerous. Looks like that double bottom or that head and shoulders, whichever way you looked at that on the chart, may have played out. So we'll see what happens over the next few days, but I like the price action right now.
Well, Abraham says everything is fine. Josh, any updated thoughts on general about the insane U.S. housing markets? Fed's Waller says we won't repeat 2008. I'm not so sure.
Well, it's very easy to say we won't repeat 2008. 2008 was like Six Sigma, once in a lifetime. We don't have as many of the subprime mortgages as we did in 2008. So Waller's not wrong, but we actually have a growing subprime mortgage market. It's actually growing. It's been growing for about 18 months now. The housing market is likely to be more stable this time than it was in 2008. If you remember 2008, Fed was not raising rates. And one of the things that works when we're in a rate hike cycle, minus the other things I just talked about, is real estate. So real estate's likely to stay fairly strong, but rates will go up. Now, I spoke to somebody named Cameron Dawson, who is chief market strategist at a company called Field Point Private. They're a wealth manager in Manhattan. And she was telling me how if you take energy alone, it used to be 8% of people's disposable income. Now it's 4%. But if you combine it with housing, utilities, and food, that's 45%, okay, of people's disposable income. That's a massive number. So if housing costs go up, rents are already up 17% just this year alone. If housing continues to go up, food continues to go up, fuel doesn't abate at all, we'll have a recession. It's just too big of a chunk of actually, I said disposable income. It's all income. It's too big of a chunk of income to not affect casual spending. So what we would call non-discretionary spending, right? Or non-cyclicals, right? Non-cyclicals and rate hike cycles tend to outperform cyclicals. Cyclicals are defensive sectors like utilities and real estate. it's too big of a spend to have this sort of hack at a person's spending not affect the rest of their spending. It's just too large. So I don't think we'll have a collapse of the equity markets, Josh, the housing markets, I'm sorry. But I do think the rally is going to slow. And then I think it's going to lead to a drop in housing prices, probably in about a year and a half, 2 years.
Yeah, because mortgage rates are up pretty big in the last month, month and a half.
Right. And again, like mortgage rates at these levels don't affect that much. When you look at the data, it doesn't affect the spend on houses that much because they're just still so ridiculously low, but they have doubled. So what that usually does is it drops people into a lower housing price bracket, and that's where we have the shortages. So that means the prices get propped up, right? We don't have a shortage in high-end homes. We have a shortage in low-end and medium-end homes. So, yeah, that's likely to prop prices up rather than hit prices initially. And also the fact that rents are up so much, I mean, people have to live somewhere. So if you're looking at rents continuing to climb, the decision may just be smaller houses rather than no houses. In the past, when housing prices have gone up, rents have been stable to lower. And it was the increase in the cost to buy that drove rental prices. Well, right now they're both going up at the same time. So it's a little stressful for people. That's why I think we're headed for a recession in 2023, because I just don't know how people make it. I really don't, with real wages headed lower.
And on that positive note, any more thoughts on the price action with bonds or the yield curve from the last couple days?
We rose today in the belly of the curve, which I thought was interesting. We basically rose in 3-year, 7-year, 5-year, and 10-year, and everything else was either down or flat. And I'll be honest, I don't really know what to make of that. I know that it didn't affect gold. Normally, when yields go higher, gold goes lower. Right. And it makes sense because if cash has a yield, then gold becomes a little bit less of a desirable investment because gold doesn't have a yield. Gold is a safety asset. Right. So I don't really know what to make of the increase of the belly of the curve, but the 5-year, 10-year is now negative 3 basis points. We're really paying attention to the 2-year 10, which actually went a little higher today. I think a basis point or two higher from where it was. But the 5-year 10-year is negative 3 basis points now. The 7-year 10-year is negative. The 20-year 30-year is negative. The 2s 10s is the one you want to watch, because the 2s 10s, as it gets closer to inverting, which I think it will, that's when you'll hear all of like the Wall Street analysts and the Wall Street talking heads start talking about a recession. I'm talking about it already. I almost think it's unavoidable, especially if the Fed is to be believed.
So do you think they're going to be, you don't think, based off what's going on now, that they're going to be able to engineer a soft landing?
I don't. I think they're going to do 50 basis points at the next 2 meetings. I really do. At least the next one. Because when have they ever all warned us about the possibility of it and didn't do it? I mean, I can't think of a time off the top of my head when that happened. And even for Powell to say, yeah, it's possible that we could do that. Right. Whereas Powell would normally be like as the chairman, he'd be kind of like the voice of calm. And he's done that in the past. Whether he's been right or wrong, we all know that he's basically been wrong about everything. At least to date. But I again think that like the Fed's toolkit can't help with most of this inflation. Can't help with energy prices. It can't help with whether Ukraine gets to plant crops or not. So therefore, it can't help with agricultural shortages. It can't help with the fertilizer shortages. It can't help with the chip shortages. It can't help with people just not wanting to work because the government hands them out money. Now they want to hand them out gas cards. If you know what drives inflation, which is more money chasing fewer goods, why would you send people more money to chase the goods that are in short supply? I mean, they want to send them gas cards. Like, I understand the price of gas is hurting people, but the way that you fix that is you let it hurt them short term, unfortunately. And I mean, we shouldn't be in this position. Let me be clear on that. But the way to fix this is you let it hurt people short term so that they carpool, they take public transportation when available. You know, some people can't, but some people can. And then you open up supply. That's what you do. But right now, the climate is such, no pun intended, that supply is just not on the table, right? So they want to send them gas cards. Now, here's the comedy of the gas cards. Nationally, there's about an 18.3% tax on gasoline nationally. The average by state, or the state's average gas tax, is about 39 cents. Some are way higher than others, right? Now they're going to send you, we'll use California as an example, which has over $1 gas tax, right? And that was, by the way, a punitive tax. They don't want you to use gas. So they put a punitive tax on people. And now Governor Newsom comes out and he's like, you know, we know people are suffering, so we're going to give you a $400 debit card that you can use on gas. Two things. So you're going to give them their money back to spend it on the thing that you took it from in the first place? You're going to be kind enough to give them, if I lived in California, I'd be screaming, you're going to give me my $400 back from all the gas taxes that I've paid? Why don't you just cut the gas tax in the first place? That's number one. Number two, if you're a fan of Great Reset conspiracy theories, which now I've been reading because of you guys, right?
Not a conspiracy theory.
Whatever. One of the theories of the whole control of the populace is that you're going to get digital money you can only spend on certain things. What's a gas card?
Money you can only spend on certain things?
It's an actual definition of it. So I'd be going nuts if I were in California. I'd be like, don't send me a gas card. Get rid of the gas tax.
Well, aren't they going to send them also to people who own electric vehicles?
I think so, yeah. Well, they got to be able to fill up their classic car that's in the garage with the Tesla. So
yeah. So, but what if you only have one car and it's a Tesla?
I don't know.
Does that mean this makes sense to you?
No, because none of it is rooted in economics. And I still maintain that economics should be a philosophy, not a science. But none of it is rooted in any inflation theory that I know of, right? It basically means they think it's transitory, caused by factors that have nothing to do with demand relative to supply. Because they're just going to pay for the demand with your money, as opposed to find a way to increase supply and curb demand at the same time. It almost seems like a desperate attempt when Saudi Arabia won't listen to you and the UAE won't listen to you, and you've already curbed the ability of the US to produce. This is like a last-ditch effort to try and get some votes before the midterms.
Well, can you answer a question for me? Because like in Canada, they said, Trudeau's going to issue a $500 stipend, or however they're going to do it, for anybody earning less than $100,000 to offset inflation. What if you earn like $100,001? Like, inflation hurts you less?
Right. That all goes to, it really goes to the living wage conversation. And now it's getting a little political, but living wage actually is economics. Okay. When people talk about a living wage, it's the same thing as pulling up this random $100,000 number, right? If you're at $99,999, you get a gas card, or I'm sorry, a debit card. But if you're $100,001, you don't. So it's basically a difference of $2. It's a $2 spin, right? A lot of people are going to go in and go, don't give me my bonus until next year, so I get the $500 gas card this year, or $500 debit card. But when you talk about a living wage, everything is relative. We already know the conversation about what's a living wage for somebody in Tulsa, Oklahoma versus somebody in Chicago, Illinois, or New York, right? They're different. But how about this? You just look at two people who live down the block from each other. Okay, let's see. Two people live in Battery Park, New York, which is on the southern tip of Manhattan, right? It's near the Statue of Liberty. Let's say that one of them is a 25-year-old single guy who's a junior investment banker, And let's say, because those guys don't make any money, they just work like crazy and they don't make any money. And let's say the other person is a single mother of 4. What's the living wage for the two of those people? It's completely different, right? So when you talk about a blanket living wage, you're talking about something that can't be calculated. Well, this is very similar to somebody like Trudeau saying $100,000 is where I draw the line. Well, what if you're a $100,000 household with 4 kids that are all above the age of 16, and your 20-year-old and your 19-year-old have part-time jobs, and you and your wife make 50? Well, let's just say let's say you're a single dad with 4 kids. The 16-year-old drives himself to school. The 17-year-old drives himself to lacrosse practice, and the other 2 have part-time jobs to help save up for college. And you make $101,000 a year. You don't get the debit card. Versus some, like, again, let's call him a junior investment banker in Toronto who lives in a studio and is going to take that $500 and buy Molson with it. It's
No
just
way,
different.
eh?
Is Molson still a thing, Mike?
I don't know. No way, eh? Yoser.
So it's just all very silly. It's all very silly, as opposed to clearing the way for more supply to balance out the market itself.
Well, you just see once they roll out the digital dollar, and then they can tell you what you can spend your digital dollars on. You watch.
I have a great answer for this question.
Christoph says, how are precious... Welcome, by the way, Christoph. Thank you. Christoph, over in Germany, how are precious metals rallying with rates and the U.S. dollar going up plus strong equities?
All right. I'm looking for something that was sent to me at 3 a.m. by my friend Todd Kobayashi, who inundates me with news, with market news, literally all hours of the night. Breaking news. The UK Treasury will make payments to the Bank of England for the first time to cover losses from the Institute's quantitative easing plans. The transfer marks the end of more than a decade when QE programs, which racked up bond holdings worth almost £900 billion, acted as a cash cow for the Treasury, delivering about £120 billion into the government's coffers. Then he added, these are his words, what happens if rates keep rising and bond prices keep falling? Government literally can't afford that. So what he's saying here, Christoph, is the government can't afford to service their debt, so they're going to print money to service it. What does that do to precious metals? Bids it up. Also should bid up cryptos if you believe cryptos are an alternative to fiat when they're printing. So this is the first actual institutional example of that. US Fed hasn't done it yet that I'm aware of. But when they start racking up these losses, servicing all this debt at higher rates, money has to be printed to pay it. It goes to that whole, remember that $1 trillion coin conversation? That the Fed could just mint a $1 trillion coin to pay off the debt? Well, it's a lot bigger than a $1 trillion coin now, isn't it?
It's like 30 of them?
It's like a $30 trillion coin. So, yes, typically rates rise, precious metals fall. Rates fall, precious metals rise. But the reason for precious metals to rise now is a falling belief in the US dollar. Now, Christoph mentioned also the US dollar is going higher. So you would say, how is that falling belief? Well, it could have been people who were getting out of the pound were getting into gold. And by people, I mean institutions. Okay. So that could be part of it. It obviously wasn't a massive rally. It's only a 2-day rally. It's a little bit above 2%, maybe 2.8%, something 2.08%, something like that. But you're going to see a rush out of fiat currencies. And initially what that does is part of the dollar strength is the yen weakness, right? You look at the Japanese yen today, fell another 1%. Japanese yen has only had one down session since one up session since March 7th. Okay. Now, if you're an owner of a fiat currency, British pound, who's just printed money to service part of its country's debt, would you go into US dollars? Or would you look at it and go, is that really a good idea? Because are they going to have to do the exact same thing? So that sort of is the case for that. So, Christoph, it's not necessarily that the yields rising drove people into gold, right? It's the yields rising makes the debt unserviceable, makes the central bank print money to service the debt, makes people want to go into gold. Does that make sense?
On the gas card, I guess they want to continue decentivizing driving, which is why they won't reduce the tax, but they do want to give some minimum support since people have to drive some.
Right. It's like, I don't love you, but I love you.
And
I
Rich
mean, this is
thinks,
this is like somebody, I heard a saying the other day, which I've been trying to think of a great example to use it. I think this is one. It's like riding two donkeys with one ass. You just kind of can't do it. Like, you're not disincentivizing driving by giving people money to pay for the gas, right? You're not. They're basically saying, oh, thank God they sent us this car. Let's go ahead and take that family trip to Florida we were planning because plane tickets are too expensive and I don't have a plane ticket card from the government. I have a gas card, right? So you're not. Now, the taxes in California, it's basically punitive. Illinois tries to use the excuse that they use it for roads and bridges, but then the entire state's collapsing in terms of their infrastructure. So that's not what they're doing with it. I don't know. What do you think they're doing with it in Illinois, Mike? Well, never mind. Don't say it publicly. So it's nonsensical. Christoph, if they wanted to continue the disincentive and they say, look, we know people have to drive right now, so we're going to suspend the tax temporarily, right? Not we're going to eliminate it. And they would be very public about that. They'd say, look, we're going to give you relief by suspending the tax, especially in California. If the federal tax were suspended, and the state tax were suspended, it would drop gasoline almost $2 a gallon in California, somewhere around 160 or 170 a gallon. That's a big number, right? And it would affect everybody the same. It would affect the person who's driving 10 miles a week the same as the person who's driving 100 miles a week. The gas card doesn't do that, right? So I see what you're saying, but to say that to say that politicians are trying to make sense, it doesn't work. They're essentially, who was it? Was Alexander I think it was de Tocqueville who said that democracy works until the elected officials realize that they can buy the votes with the people's own money. I'm butchering that quote, but it's something like that. That's what the gas card is.
Rich thinks Biden is playing with fire. With those sanctions, he will destroy the dollar.
I don't disagree at all, Rich. I completely
Michael,
agree.
Michael, welcome. Is the massive rise in the SPY and Qs sustainable with inflation unstoppable for the next 2 years and war on the horizon?
I don't believe it is, but I got to go with the price action right now. The price action tells me that a long is a better trade than a short, but I also don't have to put a trade on at all. Like, I don't have a trade here, Mike. I don't know if you do, but I don't have a trade here.
Nothing long term. It's
Yeah,
just,
nothing
it's
long
really
term
what
at
I've
all.
been talking about. People, when even the market opens and everything, everything's tactical trading to me right now, meaning things can shift literally in half a day. You can go from full blown bullish to full blown bearish.
All right.
So, are there ups trades? Yeah, I have patterns that were triggered today with the upside. This is again just a sideways correction. If you just look at what stuff we teach, sideways correction, people say, yeah, pulled back a bit, but overall, you see the bigger picture daily sideways correction, 8 catching up, 4 hour, all it was a pullback to the rotation zone. And it favors still higher prices, especially rolling into month end, especially with you've got a one bar pausing breakout patterns are very strong for continuation
Yep.
patterns. And the Nasdaq 1 bar pausing and breaking out, and could see easily the Nasdaq before month end hitting 15,100. The Dow's still trying to catch up, and what's to the downside? Well, you have still technically in the S&P a potential double top. Does that have to trigger? No. But if it does, this would be tactical trading. Could you even trigger it tomorrow? Theoretically, we get a big sell day. Yeah, this could be triggered tomorrow, and then we could be for a pullback for a couple days and then rocket higher. Who knows? I mean, that's the environment we're in, and everything's trading off headlines. Everything's, oh, we rallied today because the ceasefire talks had a somewhat positive spin to it. And then you'll hear tomorrow, ceasefire talks fell through. It does. You just got to trade the price action, and the price action. This is why you follow the rotation zones, especially 4-hour and daily. Tune into what we have to say because it will make you a smarter trader and investor. And that you just have to trade what is not what you think. We could easily rally through the end of the month / quarter. Could we have a couple pullbacks in that time? Yeah. But it's going to have a naturally end of months and end of quarters usually have an upward bias to them anyways. Especially end of quarters because all the market stuff. So you have that bias in there. And again, what's the VIX? Where's the VIX? The VIX. Is there any fear? Look, there's no fear. Look at this reversal. I mean, there's no fear in this market. You have the mega caps, which I've talked about, which we should be prepared for. You know, I said if you're on the rally, I said this last week, focus on the mega caps. I said focus on growth too. Here's your ratios. Remember, we had double bottoms in the mega cap. We have a double in the value versus growth that just hit the target. So do I have to like it? Meaning I think we should go lower based off all the macro fundamentals. No, but do I think we're also dumping money into crazy, unprofitable growth stuff again in meme stocks? Do I think that makes sense? No. But what do you have to do? Well, you're going to sit here and say, I'm short. I'm getting more short. I'm getting more short when there's no pattern yet. Now, with double top triggers, there is a pattern. But if it doesn't trigger, you got to go with where the price action is right now. Will there be great short setups if this double doesn't trigger? Sure. And you wait for the short setup and then you take advantage of it. But to fight the tape based off, this is where traders and investors can really hurt themselves, fighting the tape because I think it should be lower. It doesn't matter. The market doesn't care what you think. It only cares what Bob thinks. So, and just, you know, stuff we teach, like I talked about this morning, you know, you get above the 62.5 on a closing basis. Look, 1 hour rotation zone. We hit the first target on that little mini sloppy double, 1 hour rotation zone, closing above the 62.5. And then what did I say to target? The 87.5 to the full yesterday's highs. And where did we run to? Because it's in the stats. Did it have to, is it 100% guaranteed? No. But it's a strong enough, and I think the people who followed this, especially with the gap stuff that I teach with the 62.5 and everything else, sees how reliably it works out, and the stats go to prove it in the long run. So you have to trade with the probabilities instead of fighting it. And the probabilities right now, unless we trigger some of these big double tops, say higher prices. Is that every day? Doesn't have to be every day, but it's higher prices projected probably through month end, unless some macro thing changes in the world, like the Ukraine, Russia escalates, you know, something bad that happens there with like a tactical nuke or a chemical weapon or something, and then you get back to risk fear on. And if fear on, then that's where tactical trading, everything could shift in a moment. But until then, you got to go with the price action. Any comments, Bob?
Nope. A couple questions I want to answer there.
Okay. Well, hold on.
Go to Abraham for a
They're
second.
raising the tolls, but asking people to come back to the office.
Abraham, you know NYC is crazy when they remove the vaccine mandate on entertainers and athletes, but not on the population.
Yeah.
Kyrie Irving needs to play. I'm thinking maybe JC got to Mayor Adams.
Yeah. Christoph, good explanation on precious. I was thinking it is quite bullish when they rally on a day when the macro environment was mostly favoring a sell-off.
Yeah, I mean, like, look, we've talked about this a lot, Christoph. We don't really care why things move our way or really why it moves against us. But this was one that I was looking to find a reason for because I thought it was interesting as well. So I agree with what you said.
Okay. Anything else you want to comment on, or any other quick questions for Bob? And then I'll get to some price action analysis to prepare us. Hold on, Rich. U.S. President Biden, Russia should be removed from the G20.
Yeah. There's a funny thing. Mike, I'll send it to you. It was on Twitter. Some guy said that he basically, well, it was from, I hate when things have this source. That's why I won't spread it around, but it was from the Republican National Committee. I don't like when things have a party backing like that. But this particular thing was President Biden saying that, no, the sanctions won't deter Putin. Sanctions were never made to deter. And then it was like 10 clips of everybody from the administration saying we're doing sanctions to deter an invasion. It was hilarious. But back to real quick on the gold thing, we in the stock think tank, which you guys will probably hear something about, I'd say the next few months, not right away, but it might be shorter than that. I don't know. We've been long gold basically through the PHYS, the Sprott Physical Gold Trust, since July of last year. Okay. Since July of last year. And there were times when it was painful to hold, but we had our position sized correctly, and we had our stop, and it never hit our stop. And now it's basically paying off. We're up on that trade right now. Doesn't mean it's going to close with us up. We could still lose money, but we're up on that trade now, almost the amount of our normal win. And what do we do on gold? We actually, because of the price action, we upped the target, not because of fundamentals, it's because of the price action. So we had a target that was up around $16.50 on this. It almost got there, and we actually moved the price target up to $18.50. Okay. And it's because of two things. Number one, we have the position sized correctly for our portfolio, and we have our risk in check. But the fundamentals for gold went back and forth since we got in this thing in July. They were all over the place, right? And right now, if you just went by the rate hikes of the Fed, the fundamentals are completely against gold. We did not know going into this position that there was going to be a war in Ukraine, there was going to be runaway inflation, that there was going to be stagflation, that there might be central bank money printing to service debt that's out of control because of rising interest rates. We knew none of that. It's just a price action thing. So it's just another, like, I have super strong opinions about the markets, but the price action is the veto and the rule for everything, because that's just the only thing you could rely on, is that the price you're seeing in front of you is real. You can't rely on you being right about something. You can't even rely when something goes your way if your thesis was right and that's why it went your way. I don't think I ever told that British pound story here, Mike. Have I? You know, the one about Sushi Boy? Remember that story?
I don't think you have, but that's a good one. Let's tell that story, and then we'll wrap it up.
All right. So years ago, I worked at a bank, and my responsibility was sterling US dollar. That was my responsibility, was that currency pair. And one day the place just went nuts, and they were screaming and yelling and all kinds of stuff. And I heard people in the background saying, the Bank of England is involved. George Soros is trying to corner the market, all this stuff, right? Screaming all this stuff. Wasn't my particular responsibility. It was the sterling yen that was moving, not the sterling dollar. So it wasn't my responsibility. So when it all calmed down, I got a call from a friend of mine who was at Lloyd's of London, and he goes, did you see all that activity? And we were just chit-chatting. And I go, yeah, I saw what was going on. He goes, oh, well, I was one of the 4 banks involved in Sushi Boy Sushi, which was a loose translation of the largest sushi chain in London at the time. Yeah, they want to open up a bunch of new restaurants quickly, so they were transferring yen into sterling, right? Now, again, in the trading room, everybody was screaming about George Soros and the Bank of England being involved and the Bank of Japan getting rid of yen and all this stuff, right? But the actual fact of what was happening was that Sushi Boy Sushi was converting yen into pounds. Now, what kind of an economic conclusion can you come to from Sushi Boy Sushi, turning yen into pounds to open a bunch of restaurants? None. So even the guys who were long the pound against the yen, who may have, I guarantee you, they had a completely different thesis as to why they should do it. I guarantee you, none of them were holding long pound against the yen because they thought that Sushi Boy Sushi wanted to expand. None of them. Precisely zero of them. But their trade worked anyway, right? So that's why price is the only thing you can believe. You can't even believe something that you think and it works. That still may not be the reason why it happened, is the moral of that story.
Well, that's a good little moral because you never know. I mean, again, you
Nope.
have to trade price action, not what you think, not what you hear, like on the street, not what it's where, this one of the things I hate about the financial media. They attribute, well, the markets were up today on blah, blah, blah. And it's like, were they?
You'll literally hear 2 days in a row, markets are up on rate concerns. And then the next day, markets are down on lack of rate concerns.
Yeah.
You'll hear that 2 days in a row.
They'll contradict themselves from the opening bell to the closing bell. It was up in the open based off one thing, and it was down into the close based off the same thing. It's like,
Yep.
Huh? Do people not have that long an attention span? So, and
all right, guys. Mike,
Yep.
Thanks for letting me talk the whole time today.
All right, Bob. Powell has the easiest job in history: print money and raise rates, and be wrong. So there we go. All right, Bob. Thank you for joining us. We'll talk to you later. Let me fix this. All right. So glad to have Bob on here today. So everybody, if you want to stick around for just some pure price action analysis, not what we think, but what the market's saying. I sort of went through already in the S&P, but we'll review stuff. Sorry for all the lines. It's quite active now. Again, I could see I'm really focusing on this 45.42 to 45.57 on the S&P. You can see here, this is what I was talking about. This is a sideways correction. Again, higher time frames, Trump lower time frames. So sideways correction, how do I come up with a sideways correction? It's just moving sideways and letting the rotation zone catch up. And yes, there's always a pullback component to any sideways correction, but all it could manage was pull back to the 4-hour rotation zone and rotate back up. Let's take a look at that shorter term price action today, spiking down, hitting that first little target on that horribly sloppy double, then reversing. I put on my harmonics, and when we went through there, watched for the pullback, which we got to the 1-hour rotation zone. And you can see here, as you know, I talked to after we calmed down the morning, I switched that 15-minute also, pull back to the 15-minute, pull back to the 15-minute, and then moving up. And I already talked about the close above the 62.5 level. We targeted, and you can go back and watch it this morning, we target the 87.5 to 100 range, and we went just through it at the end of today. Now, do we have a potential double top? Yes, we do. Does that mean it has to go lower? No, it doesn't. That's why I say potential. Could it never even trigger? Yes, this is why you don't see a potential double top and go, I'm going to short it. No. Unless you have a highly valuable short signal, you don't short it. Highly reliable, I should say. For me, because again, you could pull up, we could pull back down into this and not come anywhere close to the double, which would just be another rotation play. Again, do you have some waning momentum? You still do, but on a strong push tomorrow, it could definitely be higher. So what's the next things? And again, once I deleted those lines, you see the harmonics that we've had on since this pausing area on the 21st. We hit the first one, we've hit it again, forming the double. We go through it. This is my next major range. You want the minor ranges? Here's what you do. This is a great time to use a little reverse harmonics. So you want the minor ranges for tomorrow, 45.20, or overnight, 45.22, 45.30, 75. Those are the levels I'm using for Asian and European trading. If we go through this 45.30, I'm targeting the 62.5 because that's such a critical level. That's it. To the pullback levels, I'm really just watching this 4 hour. Any pullbacks, 4 hour rotation zone, top is 44.83, bottom is 44.64. The only way I shift to short term bearish is if we trigger below 44, 44.75. That's the only way I short term bearish. Could we pull back and then move up again and make a triple top without triggering? We sure could. NASDAQ. Again, if you're not watching the market preview, I think you are missing out. We covered this. We had this little double. Asked the question. I forgot who asked that. Sorry about that. Was that a valid double? Coming back down, we had 1434.25. What was the low? 14. We had 14.434.25. The low was 14.433.50. I don't think you can get much better than that. Reversal up. Again, this is where you leave the harmonics on. I put on some of these harmonics. It should actually been, once we hit this, a little reverse harmonic. Doesn't really matter. You know, pulling back 15-minute rotation zone, prior harmonic level, and then moving back up. And again, same thing. Same thing, stalling out at the next. You see here the other harmonic level we had on here still, 14.657. Then the next one, 14.723, little pause going in there. And then this is where I also put on the reverse. Let me show you again. Reverse harmonics. I'll redraw them. Why are they reversed? Because they're the same 12 and 25% level, but they're drawn back in time. So as you're going to make new highs, this is a great way to project where it could go. 14.755, kablamo. Above here, strong rally tomorrow, 14.848 to 14.856. We already have the levels developed. Now, the only thing I can do with this little pause, and I'll have to fine tune these overnight, but if we use this as a very short-term pause, you can see this pause on the 15 minutes is all I really have at this point. But look, that just already confirms the target we have up there. Price of admission is it's relatively cheap. Above here, then the next target, my next major target through the end of the month is 15.113. Do we have a double? No, we do not. This is invalidated sideways. Here's your 4-hour rotation zone, moving sideways, rotation back up. Only thing that really changes my stance with the NASDAQ right now is if we broke below about 14.460, 455, 460 in there, then I'd start targeting the bigger pullback because we'd also probably trigger that double in the S&P. Dow, same thing. Little with that sloppy double, 34.247, little spike down, and then reversal. Here's your harmonics, stalling out there, getting through there. Then the next one that I did the projection was 34.614, and then we had the significant level at 34.648. Remember, I talked about the advanced clear path move. Okay, I did that in the morning preview. The market open, advanced clear path move. What's the breakdown zone? Was 34.652, and we spiked up there. You can see that little spike up there and moving back down. Here's your 5-minute chart. Okay, so there's what you have. I'm just watching I'm watching the 4-hour, and then on the Dow, do we have a potential double top? It's turning into, but not quite, a triple. On a rally tomorrow, it will be a triple top. I'm still going to leave this in place for the move over here, but we'll fine tune that tomorrow morning. Crude, finally starting to get the rollover. Closed below the trend line. Still a little clear path area down. Still just hanging on that 4-hour rotation zone. So that's what I'm watching when crude resumes. We start getting acceleration to the downside. I'm targeting about 108.50. And then, see, a 108.50. That was a 50 on the 4-hour. I'm targeting 108.50 virtually again with the daily rotation zone. The only way I can get super bullish here again is getting a close, I mean, super bearish and looking for that bigger pullback as a close below 105. Now, you also wondering about that 62.5% level right here. You can, let me try to move. Let me see here. 15-minute. You see here that purple line. That was the 62.5% level we talk about. That's where it formed that double top. And still no close above that. I still need a close above that. And how did we come up with that level? Again, for newer people, we have our harmonics, which are 12.5% increments. And we drew them from the spike high on the 7th of March to the corrective low on the 7th. And that's the key level right there. So that's what you're watching. If we do pull back and then rotate back up and get the close above the 62.5, that's resumed bullish mode. Until that happens, nothing else to talk about unless we get a pullback rotation trade for a bullish play. Other than that, we could shift to short-term bearish, remaining long-term bullish. You're welcome, Christoph. I know you find this teaching helpful. Let me know for other people if you find this helpful, like when I go into key things. I know sometimes it does get minorly repetitive, but I know a lot of people have to hear it a lot. So, and remember, this is still a tactical trading environment. This is not something you just walk away, put in a stop, and walk away from. Even gold and silver, which is putting a stop and walk away from, we've been in long this stuff forever. I'm still trading around a core position because it's tactical. Until we really break out of this range in super bullish mode, it's still tactical. They're still trading around the core position. By the way, if you want to know what I mean by that, Amit, who's not, I don't think he's in this live stream right now, talked about, I put up Mike's classroom video on trading around a core position. Please check it out. It will give you some insights. Other than that, let's just glance at notes real quick. We still do have, even with this price action, still do have a potential double. We get another strong push down. It turns into, on the shorter time frame, a triple, but it's still valid on a daily, sort of. But that's came nowhere near triggering yet, 123.12. I'm still watching again, especially if we continue rallying for another push down. The next major target cluster on this is 121.24 to about 121.17. That's why these levels are so helpful. Why? Because you can come up, we already identified, instead of saying, I don't know where it's going, we've already identified levels. So you can go into a trade managing reward and risk and managing your levels without trying to guess them while the trade's unfolding. Anything else that let's just take a look at the, where's something else? Let me see here at the heat map again. Ken asked a question with Home Depot this morning. We'll glance at that. Apple's still up. Microsoft's still up. The mega caps, that's where I said to be in, and they're still running. And just because that double completed in the mega caps, you can still trade them through strength through the end of the month. Growth in mega caps can still keep running. Home Depot, which Ken asked about this morning, still hanging on the 62. I said if you're going to try to do a channel play, you got to keep the stop below the 62.5. It's still hanging in there, but I am not bullish on this. Again, if I'm going to pick something to play through the end of the month, now Apple's been running. If we do get a pullback play, I'm watching this 4-hour rotation zone for a pullback play. Other than that, if you're long already, it would have to be intraday price action plays. Why? Let me move this up from the reverse harmonics to this pausing area. Why? Because you got this harmonic 175.46 and this price action right here. So you have, this could be an intraday play still on continued strength in NASDAQ and S&P, still 120, 175.50 area. Definitely an area I would be unwinding a part of the position. And then if it did continue through there through the end of the month, 178.27 already identified. As long as you stay above this trend line, also with the daily rotation zone, any pullbacks could be a potential buy. These are the kind of plays you're looking for. Microsoft, I'm still watching for continued 307, 27, 3, 1141. You do have a little double top here. So if we did get a close back below here, I'd start watching for a potential bigger pullback in Microsoft. I would not be shorting in this environment going into month end, but this could be a little reversal play. I don't even know if it could pull back enough to trigger that. It's again tomorrow. You might have an intraday breakout play. You can see here testing this area once, testing it again on the 22nd, and that was the 20. Sorry, testing it twice on the 22nd, testing it on the 3rd of March, and now rotating back up off the 4-hour rotation zone. So even tomorrow morning, a breakout above about 304.20, 304.50, 304. 307.27, 311.41. Again, can't give specific trading advice. Is something I will be watching. So there's a couple. Whatever your time frame is now, would I just get in this tomorrow and try to turn it into a long-term, super long hold? No. If you're not already on it, then these are more shorter-term trades because we are going into toppy price action, and this could even get back to that 200, which would be, would I be surprised to see it by month end? No, I wouldn't. But then that could be a major reversal area. So keep that in mind. Can we check BTC? Sure, we can check Bitcoin. Bitcoin. Again, we still have a potential double bottom in here. We stalled out at this significant level, this 42,150, 42,100 area. And now we're starting to accelerate. No, we have a significant level at 44,585, so essentially 44,600. Closing above there, then I'm going to really be watching this area right here, this 45,855. Why there? Because it could make a run higher at that point. The only thing you sort of have to be concerned about is we have this flat 200 right in the way. And why am I still watching it? Because this is still the move that started the pattern. If you look at the weekly, this is just a pausing area. Now, this is also where I'd probably lower my, shifting my stop up also to about 50,804 instead of 51,621. So this would be a topping area for me to raise a stop. Okay. So that's your bullish mode in Bitcoin. What shifts it? I start getting concerned if Bitcoin cannot hold this now 41,000 mark, this right here, right in this area, then I'd be targeting back to 37,000. But as long as Bitcoin's staying up here, it's now favoring the breakout pattern. I don't have a front run signal. There's just the rotation zone signal coming back, stalling out here, coming back to the rotation zone and trying to rotate back up. Can you review the silver double bottom? Are you looking for a pullback to breakout on this for a retest? Was discussing with Christoph earlier today. Again, were you discussing that in Discord? Were you discussing it in the Discord server where I know there's lots of conversations that go on? This is, let me clear off a bunch of this. It kicks off the neckline goodbye. Let me clean up this chart right now. We can always put that back on. I just want people to focus on one thing at a time. This is technically a double. It's horribly looking on the 4-hour, but it does technically work on the daily, and you've got the daily close here. So where would you be sitting with this? It is still valid. It's just sloppy, but the only thing I do like about it is this pausing area is your first target. So 26,280. Where I like to do these, a watch for pullbacks. If you want to watch for a pullback in this, let me show you the exact stuff I watch for. See these candle bodies right behind the peak? So here's the peak. Here's the candle bodies. Retest with that high, nearly retest with that high. and then I watch something like the 4-hour rotation zone. So I'd be watching for a pullback in this area with the rising 4-hour rotation zone, and then I wait for some kind of rotation back up. But that would be all right. It didn't get to the first target, pull back to the rotation zone, and then a push higher. That's how I like to play this. So I'm watching between 25.77 and 25.64. If it did pull back farther, then I'd watch the bottom of the rotation zone and then a rotation back up. Let's say you had a series of candlesticks pulling back beyond that level. I don't get as aggressive then, but if you wanted to lean against something, it would be more 25.41. So that's your little silver play. Tesla, please. I mean, now what's interesting is you had a pretty decent Nasdaq rally. Tesla underperforming, but roughly in line with the S&P. We don't have a technical double top here yet, but if it does push higher, then you could get a double topping. Again, it's working off its overbought condition. It's what I talked about. So far, this is a sideways correction. Where am I watching that the move can be over? Bottom of the 1-hour rotation zone and this little support shelf. We start dropping below here. Then the short-term top is most likely in. Other than that, the targets are still remaining the same. I could update here. Let me update them though. Your next target on the higher move, still no close above the 62.5 on this runoff. But if you do get a close above that, then I'd be targeting upwards to, you could easily get to 1100 to 1145. Stranger things have happened. Now, if I would not chase this higher based off a daily trade now, you're still in massively overbought. So if you're doing intraday trades, tomorrow I'd be watching this 10.17.25 level, a break above there, targeting 10.40, a break above there. If you want the minor levels, here's how you do again, reverse harmonics. Your minor levels, I'd be watching 1046 just for slight pause, but 1053.28 and then 1076.28. Those are your upside targets, and that's your downside risk level right there. What do I think about Nvidia? Nvidia, you're into this, again, this little move, but we're almost in the top out area. I need to see it really get above about 285. Above 285, 301, 300, 301 would be the next key levels. But this 285 level, you have a pretty significant rotation there. So if we do get a pause in the markets now, if the Nasdaq's strong again and this starts running, I'd just be targeting 301 over the next couple days. Pullback levels, you see here prior resistance, boom, 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 boom. Rising 4-hour rotation zone, flat 200. This would be a key area. If we got a bigger pullback, that's where I'd be watching for a rotation back up, and which would be at the 1-hour rotation zone. If it just drifts sideways, I'll watch what happens tomorrow. If it drifts sideways when the 1-hour connects with price action to see if you get the breakout play with 8 pushing the price. That's your little Nvidia. As longer term, as long as it stays above I mean, you don't really want to see a daily close back below about 267 at this point. A daily close below that, I'd start watching for a bigger short-term pullback. Even with a pullback and then a daily close above here, then it's just a pullback move and then play for the end of the month. Odds of Tesla retesting lows. Still Which lows? The lows, the most recent lows? This low? This low? Which low are we to this low? Which low are we talking about? We still have the, I'll let you know if the massive topping pattern gets invalidated. Now, longer term, I still think this year you're going to see price action in the 5 to 600s longer term. Short term, once we get above the 62.5 on the closing basis from this pullback, then it favors continued short-term price action higher. Well, I think it'll ride lungs until I see the trend shift, and this is why I always like to trail out. So instead of trying to call an absolute top, you just trail out. Trail out, especially as long as you can hold it through end of the month, unless we start triggering some big sell patterns. If we start triggering big sell patterns, it all shifts. Right now, my advice, not financial advice, just educational trading advice, is you bank some profits to keep something in case there is some out of the blue massive reversal, something shocks the market at this point, and then you just ride the rest of the position higher, ratcheting up your stops every day. And then if you want to do something else for the day, you find like some of those plays like that Microsoft thing I showed that could be playable tomorrow. And you put a little short-term play in there. Other than that, I just, like if you were already in Nvidia, if you were already in Apple, if you're already in Microsoft, I'd just be ratcheting up the stops. Is close your eyes and hold your nose and buy. With that, I'm going to wrap it up today. Tomorrow, I might end up doing a Mike's Classroom session tomorrow afternoon as a live stream, because there's something I want to talk about to people. So that's probably, so if you can join me tomorrow afternoon, I'll mention that. We might just leave the market analysis till Sunday. I might just do a classroom session tomorrow. Take a look at how well the 50 retracement held on the 5-minute chart on the potential gap fill on MO today. I am developing so much confidence in your system. It's incredible. Well, thank you, Sterling. Sure. These levels they've tested. They have tested. I wouldn't put them out there. So what he's talking about is the gap. Here was the close. Here's the low. And where do we start targeting the gap fill? Above the 62.5. Preferably on a longer term close, like at least a 15-minute, if not hour close, based off how long it's been. But look, the 50% from the close to the lows. You don't do it from the move. You do it from the close that right before the gap. Held. Spike up, but couldn't get to 62, and that's the 5 minutes. So that was just a brief little spike. Look at that. So this is where if I'm playing something, you know, I already know the line. So if I want to play Altera intraday, I already have my level identified. 52.72 on a close. How can you play that? I prefer a 15-minute close at least, but then you can do pullbacks in your, because at that point you'll have your 5-minute rotation zone coming up. So I could watch the close above here, pull back 5-minute rotation zone, or pull back 15-minute rotation zone, depending on where that is, and then you can play this higher for a gap fill. And also, if you look at just your daily, this is where multi-time frame is super helpful. You're still holding the rotation zone. Now, where would I shy away from watching for that gap fill is if we started breaking below today's low, then I'm more eyeing the bigger pullback back to 51.04 for the play. But as long as this, you have the gap, which had the dividend today, 90% dividend. So that also, remember, dividend comes out of the price when it pays. So that was a gap with the dividend. But, you know, I could see this definitely a play tomorrow. If you want to get a little more aggressive because you have such a resistance shelf at that 50% level as Sterling set out, you could try to front run it. This could be, because it's also a breakout play then at that point. What do I mean by front run? You start getting price action breaking above, or you gap up, retest, and rotate back up. Then you can use 62.5 to raise a stop, and then just keep raising your stop if the move continues. Again, can't tell you specifically. I don't know your account size. I don't know your style. I don't know your duration. I'm just trying to teach you things that do work for all different kinds of trading. BiteWiz, don't know what that means. MU, interesting play for next week, and then I will wrap it up. Yeah, MU could be an interesting play for next week. You break above 80, this high right here, it could be a very interesting play for next week. That would be back above the 200, back above the daily rotation zone, into a clear path move. First target, 86.17. Let's see where the harmonics fall. So look at this, 50 on the 50 on the daily, 82.81, raise stop on a breakout play, 84.34. That would be another raise stop level for me, definitely, because it lines up with this key gap open. And then first target, 86.17. That could definitely be a play. I wonder how that looks like on... Yeah, you got a little flag pattern here too. Oh, you were okay. You were talking about the 700. Yeah, and so you want it. All right, I'm going to shift back to Tesla. Then I'm going to do one thing. If you want to know what key level, use your on this last move up with this momentum move up. If it starts breaking down until it closes back below about 863, I wouldn't worry about the lower prices. It would be just a standard pullback. You get a close below 863, then I would focus on Tesla really breaking down again. And then the probabilities would shift that you're going to retest this. You're definitely going to retest the most recent lows. And then if you got below, see, this is how then you shift to your next level. Then if you got below 828 on a closing basis, that would favor a shift to the retest of 700. Until that happens, the odds still favor choppy to upward price action at this point. Now, if we get massive, like NASDAQ crashing and momentum to the downside, then we will reevaluate. With that, lots of teaching today. Thank you for being here. Hope everyone took something positive away from this session with Bob and myself. Please do leave some comments and some thumbs up on the videos. Let's try to get more people in here. If you want to join the Discord server, it's incredibly cheap, $10 one-time fee, and you can talk with people like Sterling and other people, Christoph, who are on there, who are posting things all the time. With that, thank you for being here. I'll talk to everybody tomorrow on the open. Bye for now. Thank you, Eric. Bye for now.